Welcome everyone to the Kendall Report, where I share my 44 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. In today's video, I'm going to discuss a couple things. I talked about the great rotation that is possibly happening. We're going to go through some details looking at the Russell versus some other indexes, and we'll also be talking a little bit about what's going on in the marketplace as far as what I'm calling the Trump pump. Let's get into tonight's video. Well, folks, it's been quite the last 10 days. I did a video last Monday. I'm back again. Unfortunately, my schedule doesn't allow me to be here every day, doing my best, but I keep telling you, go to the Substack. I'm actually expanding that. We have some individual stock platform we're putting together right now, just kind of at the infancy of that, but it is actually there. You need to sign up for the Substack before the end of the month, pay for a full year, because I'm raising my rates from $8 a month to $19.97. And so that's going to be happening on August 1st. So after that, there will be a special rate for a year rate on that, but you can get it basically for $6.65 per month if you sign up now. So make sure you do that before the end of the month. So let's get into talking about some of the things that I want to discuss tonight. And I think it's interesting that the key element that is happening right now is the events of the RNC, the Trump assassination attempt, which it appears that the markets are confirming, I guess the best way to put it, that Trump will probably be elected the next president. And then we've got the events of yesterday on Sunday that Biden drops out of the race. They're putting Kamala up, it looks like, but there's a lot of controversy. My expectation is they will just move this on all the way to the DNC, which is about a month away. So there's going to be a lot of noise around that. But the markets seem to be acting really well. We saw 3 days down last week. We saw a decent decline. We went down to some of the levels that I was talking about in Substack. And then, as I told you, I expect to see at least a 2-day bounce. Today was more than a bounce, it was a rally. We did see a nice run up, and we'll probably see some follow through tomorrow. And in tonight's Substack, I'll talk about points where you're likely to get a rejection. Now, just one more note on the Substack is you can get a 7-day trial as well for free, and then it starts to bill after that. Here's what I've been looking at here from the standpoint of what the markets are doing. I think we are starting to get a little frothy. As you know, I've been talking about in Substack the whole scenario about the intermediate database rolling over. Well, it doesn't roll. It just refreshes. It's actually rotating, meaning that there's buying and selling coming in each week. I think the lowest we've been is around 61% bullish. We're back to 65%. So we're just back and forth there. It's amazing the resilience that the markets have. And I think a lot of this just has to do with expectations of a friendlier market going forward from a business standpoint, taxation. There's optimism coming into the markets. Might be a little bit early to play this, but regardless of that, what we have to deal with is the flows of the markets as they happen. Let's talk about this just for a couple minutes and what I believe we're going to see as we go forward in the week. Now, let's flash back, and I'll bring up a couple of charts here in a minute. But the Russell surged sharply. Everybody's screaming all-time new high, and then we get a pullback. There's still a lot of work to be done, but you'll see here when I bring up the pairs, I'm going to compare the NASDAQ to the Russell. But the point of this is to show there is a bit of a rotation happening, and whether or not we make all-time new high in the Russell 2000 or not at the moment isn't as important as some of the rotation we're seeing in the background. I've talked a lot about the rotation just now in the database, On the daily database, we've seen a substantial rotation where we got up to 70% bullish, and now it's already fallen back to around 55%. I don't have the numbers for the run. I'll cover that in tonight's Substack. But just to kind of carry this thoughts forward, is everybody's been expecting that the Russell is going to start to lead. Now, I'm an old school guy, I've been around a long time. Typically in the market cycle, that's what you see. Everything gets really expensive on the large cap and even the mid caps, and then everybody's looking for cheap, right? So they're looking for somewhere to rotate, take profits from the stocks that have worked and rotate them into some other stocks. And the interesting thing is the current construction of interest rates and everything else that's going on really aren't allowing for this enthusiasm to play out at the moment. I think in 2025 it's going to look much more favorable. And what is likely to happen at the moment, though, is there's a lot more work that needs to be done. So what this means is there's more rotation. We've got to work out a lot of the interest rate disruptions that have happened and all of those things. I'm not going to go into big detail tonight on what I think is going to happen in the yield curve, but I will do that soon. I'll do a special video on the yield curve adjustments. There's really no hurry because everything's going to stay status quo. Even if the Fed were to lower by 1/4 of a point in September, as everyone is expecting, that's not going to materially change a lot of things. So let's go ahead and let's stick on this theme right now. Let's take a look at some of the pairs. Let's start with the Russell to start with, and then we'll go from there. Taking a look at the Russell here, this is a daily chart, and you see the big surge I was talking about, the backfilling. We actually rallied up pretty sharply, but we're looking at the PPMs here. They look like they want to roll over, and from my viewpoint, I think we could give back most of the rally that we saw. I do not think this thing is ready to run at the moment. There's, like I've been saying, there's a lot of work to be done. If we look at the algos, they're about probably Wednesday or Thursday, we're going to cut through the first derivative on PPM1. The same is going to happen on PPM2 and so forth. And what we're likely to see then is a move back in toward this 21 period moving average. So I don't think it's going to collapse, just don't think it's going to run. So let's take a quick look at the weekly chart. It's kind of forecasting the same type of situation. We had these Fibonacci targets up here. I talked about them in some of the reports that I've written, and those numbers are at 2243, 2285. We actually printed up to the 2278 level. So we went just above fib target 2, and now we come back in. You can see the dotted lines here. This is a forecast, doesn't mean it will happen, but it's being forecasted basically to go into a sideways pattern. And I'll draw in what I believe will happen as far as the market grid goes, and this will give you a bit of a understanding of the expectations. So market grid is likely going to start to come in when we get this big differences, big volatility. It will start to come in, and I think ultimately we end up trading down into this, just like the pattern is suggesting here. We're looking at a trade down in this pattern, and it's going to be possibly a while before we see any major breakthrough at this time. Go to a monthly chart and bring that up, and then we'll look at some of these pairs. Two things I want to look at on the monthly chart is the patterns that are out there. We're still looking like an upward bias here, so the support is going to be right around 2050 to the 2088 level. Let's take a look at the algos. There is no acceleration really going to go forward here. It looks like we could get into a bit of what I call the trend maintenance mode, but it looks like everything wants to fall back in and possibly even go negative. So I know a lot of folks want to be really excited and jump on this trade, but I'm still very cautious about this current situation. All right, let's take a look at the spreads here. This is a daily spread. You can see the algorithm is suggesting we're going to be stable, just like we looked at the Russell here. Let's start to look at the weekly trends. There's been just a steady downward flow here. Even though we look like we made a big move in the last 10 days, we'll call it, we really haven't done anything. The trends are still down. Let's take a look at the algos. It still looks like there's more downward pressure. And I think a lot of folks, this is why I continue to say that a lot of folks are premature on this. Now, there's a lot of expansion that can happen as this thing starts to move. But I just believe that the current interest rate environment is not going to allow this market to be able to get to a healthy point. I think in 2025, this is very possible. What I want you to understand, while it looks very solid and all exciting, and I see people on Twitter going, yelling at me, telling me that how the market's going to go. When you look at this spread chart, it's not done anything. There's certainly a great trade. Maybe we're setting up a right shoulder here on this spread. It's getting there, but it's not there. And this is the analysis when we look at the monthly charts, we look at all of the different elements that has to happen for the markets to switch and make this paradigm shift. There's still an awful lot of work to do. I would argue easily into Q4, probably into Q1 of 2025 is where these things happen. Now, one of my hypotheses that I continue to talk about that I believe is going to drive the markets will be productivity gains based on AI and some other events that I think are going to kick in on productivity. Also, I believe that we'll start to see rates start to decrease in the first quarter of 2025. I'll do another video just on the yield curve because I think that's worthy, because this is exactly where this market needs the shift in the structure of the interest rates to make these companies actually work. And until that happens, there's just going to be headwinds, and we're just not going to make the kind of gains. I'm not saying that the Russell can't rally, it can't make a new high. I'm just telling you that there's going to be rejections off of resistance points, just like what we saw last week. There's more of those to come, more work to go from that standpoint. Make sure you get the Substack. That's the best way to get all my micro analysis. I'm working on getting it out earlier every night, but at the moment, we're kind of stuck to where I can work. I don't have the ability. I'm at my studio right now, and I don't have the ability to get to the studio as much as I normally like to. There's a lot of variables to get me over here right now, even though it's about 7 minutes from my home. Anyway, folks, I appreciate all your patience. I appreciate you continuing to follow me, and make sure you subscribe and like these videos. We'll talk to you soon.